We continue to look for some pockets of opportunity for investors. Our next guest says to look to names like Microsoft, Honeywell, and TJX. Wealth Enhancement Group Senior Portfolio Manager Ayako Yoshioka joins us here on set. It's great to have you. Welcome.
Thank you so much, Carl.
Mentioning those three names at least, talk about the thread that you see running through them. What do they share?
Sure. So I think growth is the main commonality across all three. I think you still want to have that growth across stocks in your portfolio. Valuation is a concern, clearly. I mean, we all talk about that as market hits new highs. However, I think you want to have stocks grow for you. We just talked about some of the S&P earnings targets. Are you getting the feeling that earnings will fill some of that gap where you don't have to fret so much about multiples? Absolutely. Absolutely. I think we've seen with earnings season that there are companies out there who are growing. Inflation is helping them out from a pricing perspective and revenue perspective. But I think overall it's positive for companies in the S&P 500.
What is the strategy around consumer stocks right now with worries building around resilience in the consumer, growth, and jobs?
Absolutely. Great question. I think for us, we believe that, having exposure to quality names is really important. And as Walmart talked about last week, having exposure to the sort of trade down in that higher end consumer, those consumers who are looking for value, looking for bargains, I think names like TJX really fit that bill.
TJX has, been a winner. Do you revise growth targets at this point right now, given what you've heard?
In terms of earnings growth for individual stocks?
No, GDP growth for just based on what we're learning about consumer.
I think for us, we think that the overall GDP growth is moderating. We continue to think that that's going to be what occurs throughout the rest of 2024. But, I think it's not going to come down so much where it's going to be problematic.
Meantime, I wonder, are we starting to talk about, are investors calling about questions with regard to tariffs or what that will do to inflation in the case of a change of administration? What happens after November, that kind of thing?
Yes, we're getting a lot of questions about, just investing in an election year and what that means for investors overall. A lot of concerns over, what type of impacts we'll have from tariffs and whether or not that's going to be inflationary again. I think, there's a lot to sort of play out still for the rest of the year, but we're still positive, as Mike talked about, in terms of new highs, leading to new highs.
How much exposure do you guys have to tech? Because I feel like everyone's wanted it to broaden out, and yet it still leads this market.
Sure. We're continuing to stay overweight tech. I think tech in the long term is where you really want to be to achieve that growth that I talked about. But we want to balance it out with, sort of names that have some value towards them as well, some cyclical names that, can participate when the economy continues to grow.
And then still favor U.S. over Asia-Pac or Europe?
We do like a U.S.-centric approach. However, we did see from the most recent earnings reports that a lot more positive commentary about especially Europe. Europe, as in terms of the consumer and the economy, has started to pick up a little bit, and we'll get potential cuts out of the central bank in Europe, so that could be a positive catalyst.
Yeah.